Co-ops are a unique yet ubiquitous breed of real estate ownership in New York City. The process of buying one is completely unique too. Imagine buying a place that you don't really get title to and jumping through hoops to buy it. And I don't mean just financial, I mean personal. If you've seen my video on why co-ops are a good bet, you'll have an idea of why it's worth going through the process. So in this video, I'll break down what the process actually looks like and how to plan for it successfully. I'm Lucian. I have over 20 years experience selling pre-war and post-war co-ops and condos, townhouses, new developments, and multifamily and mixed-use buildings. My contact info is in the description below. Please like and subscribe and email or text me questions you want answered on this channel. So, what does it take to buy a co-op? Here are the two most important guidelines. But first, let me quickly walk you through why boards operate the way they do when it comes to approving new buyers. Boards prioritize financial stability, long-term commitment, and responsible ownership when evaluating potential buyers. They assess applicants' ability to afford the costs associated with co-op living, including monthly maintenance fees and any assessments. They also seek applicants who will be good neighbors and adhere to the co-op rules. While that sounds obvious for any building or community, given the density of living in New York City and the array of types of buyers that are interested in owning here, co-ops have evolved into a form of triage that goes well beyond the usual, if you can afford it, you can buy it. In other words, there are plenty of fish in the sea, and after all, it's the board's responsibility. It's their fiduciary responsibility to preserve shareholder value. So it's their responsibility to properly vet new shareholders. Some may argue that they exercise that responsibility with too much vigilance, and perhaps that may be true in some cases. But when you look at the financial soundness of most co-ops through the very difficult times, like through the great financial crisis, for instance, co-op foreclosures are practically non-existent. In essence, it's a double-edged sword. On the one hand, the process can seem overreaching, but on the other hand, you feel assured that you're buying into a community that upholds the same high standards for all owners. With that, let's look at what boards look for. Know that these are broad strokes and will vary building to building. The first, and by far the most important, is financial stability. For this, boards request detailed financial documentation. They thoroughly review financial statements, bank statements, tax returns, and loan documents to assess an applicant's financial health. In addition to this, they look at your debt-to-income ratio. They scrutinize the debt-to-income ratio and look for a low ratio that's ideally below 28%, but in some cases even lower. This means they want to see that the buyer is not spending more than 28% of their monthly income on the mortgage plus the maintenance. You do not want this ratio to be tight. You want to show income that easily clears the ratio. In terms of liquidity and reserves, boards want to see sufficient liquid assets to cover mortgage and maintenance expenses for at least 2 years. This means that after closing, meaning after your down payment and closing costs, that you still have 2 years of monthly payments in checking, savings, or money market. This does not include brokerage, life insurance, or other assets. So know that you may need to do what you have to do in order to show actual liquidity. Also, boards will look at job stability. An employment letter is standard and lists your salary. If you're self-employed, they will ask for proof of income payments and regularity. The board wants to know that you have job security and will consider the potential for job changes or layoffs. Lastly, to cap the financial stability aspect, boards will conduct background checks to assess an applicant's credit history and criminal record. The second qualification boards typically look for is a long-term commitment and responsible ownership. For one, boards want to know that you will be using the apartment as a primary residence and intend to live in the co-op long-term, reducing turnover and promoting stability. And in the instance you're buying the apartment as a pied-à-terre, that this second home is a residence. In other words, that you're not looking to buy this as a fix and flip opportunity or intend to transform it into a recording studio or use it as a place of business or a professional office. Remember, they don't know you at all and imaginations can run wild. So to get an even better sense of who you are, boards will require several letters of reference, both business and personal, in addition to the employment letter, a letter from your current managing agent or landlord, and a letter from your bank. These letters outline your personality and character, and that's where the board can pick up clues as to what to ask you at the interview. And by the way, if you have a pet, they may request a letter from your vet. It's not common, but it does happen. Once your broker has helped you put together the board package, they submit it to the managing agent of the building. The managing agent reviews it and forwards it along to the board members with their comments. The board then reviews it and at their next meeting discusses the application. This process can take up to 4 to 6 weeks. And if everything checks out, they decide to invite you for an interview. Now, let's take a quick minute to look at instances where everything doesn't check out. You and your broker thought that everything would. It's anybody's guess as to what was interpreted or misinterpreted in the application. This can be very frustrating because oftentimes boards will not reveal what their hangup was, nor are they legally obligated to. It could be that they changed their policy because of a bad experience or just perception. Some examples: they allowed a parent to buy a unit for their college graduate child, and while the child presented well, it turned out the kid wasn't the responsible young adult they had perceived. Or the economy is in flux, and while the applicant seems to have a stable job in the industry and their income to expense ratio is currently below the 28%, the board would feel more comfortable with someone in that line of work with a 25% ratio. They used to have a musician in the building and it drove everyone nuts, so now they're skittish on musicians. But it could also be something really opaque and perhaps downright unjust, like perceiving the purchase price to be too low. This one is a really tough pill to swallow because both seller and buyer have agreed to the price, and the market should be what dictates the price. Price fixing by boards doesn't serve anyone well in the long run. Or someone on the board happens to know of the buyer through the grapevine and has heard negative stories about them, so now they have some unfair bias. Or the board knows something that wasn't revealed in the building's meeting minutes, like, say, a big assessment that's coming, and anticipate that the buyer would not be able to handle it given their liquid assets post-close. Know that these last examples are super rare, but that they have happened, and I'm here to share that with you, not sugarcoat anything. So ultimately, the better represented you are, the better the chances that you'll avoid finding yourself vying for a co-op in a building that may not work out. Minefields averted. Back to the typical experience where everything does check out in the application, finally comes the big last step, the infamous board interview. At this point, they already know a lot about you, and really it's about dotting the I's around what the package has revealed. There are many common sense tips to follow that every broker can walk you through in detail. Most importantly, just remember, board members are shareholders just like you will be and are seeking good neighbors who will be respectful of other residents, adhere to co-op regulations, and understand the rules in the community into which they are buying. Want to know more? Drop your New York City real estate questions in the comments. I'd love to answer them for you. And please remember to like and subscribe.